Hi, this is Peggy from Rereflexive. So today our guest is Donald Chu. So Donald is the co-founder and CCO of Finaeo. Thank you so much, Donald, for being here.
Thank you
And
for having me.
no, that's great to have you. And Finaeo is an insurtech connecting carriers, brokers, and clients through a fully integrated experience. So insurtech is very hot right now, and so really looking forward to hearing your thoughts on the new normal in financial services.
Sounds good.
So the first question for you, Donald. So what do you think would be some of the lasting impacts of COVID in the industry?
I think the lasting impacts will be very positive for the industry in that, we see a number of things happening as a result of COVID. The carriers, like insurance carriers, have really accelerated their e-application process.
Mm-hmm.
So because they know that the in-person experience cannot happen anymore, they had to quickly figure out how to make sure that the advisors' applications for customers can still go in on the digital format. And also making sure that everyone is trained on many of them actually already have e-applications, but the adoption rate has been very, very low. In the past, it's been creeping up slowly, but COVID has been a major catalyst for that going up, into the 70 percentage points. And what it used to be was actually like 20 to 30%, even only a couple of years back. Even pre-COVID, we're looking at like 30%. So it's really had a major jump. The other positive impact is that a lot of the insurance carriers, I'll start with how it was impacted. So part of the application process is that pre-COVID, you would have a nurse visit the person who's buying the insurance to collect blood and urine and potentially saliva, right? And doing all these measurements. And sometimes they do an ECG, cardiogram. And so that's an in-person experience that, again, cannot happen anymore. So the insurance company had to increase their underwriting limit in that, okay, if it's under, say, $250,000 or $500,000 of some simple term life insurance, they would require perhaps the insured, that's seeking to be insured, to answer a set of questions. And then it's usually yes, no questions. Have you had a heart attack in the last 6 months? Have you had a stroke? Things like that. And if it's mostly no or all no's, then they would instantly approve it up to a certain limit. So we see most of the carriers across the board offer that. And that's, in general, that is a very good thing. It really simplifies that experience for customers, and we're all for that.
Oh, that's wonderful. So that's a good segue to regulations and policies, because I'm sure insurtech, insurance being extremely regulated, you have some things that might have blocked this digital experience and something that might fuel them. Do you see new regulations, policies helping what's happening right now?
Right. So a lot of insurance companies, they are self-governed through a mutual body, and it's called CLHIA. Canadian Life and Health Insurance Association. So through CLHIA, where most carriers are member organizations, they normally would draft positioning papers on, okay, this is where we believe collectively as an industry, the regulation should be. And then they go to the government, and then there's this back and forth, and usually government consult with them as well as the independent body if they're going to roll out some sort of regulation. Give an example. Earlier, perhaps last year, they had a regulation around collecting genetics on these kits, like 23andMe, for example. So people would order that and get results. And before the regulation came in, carriers would ask for that. And in some cases, because they did this test, they may have found out stuff that they wouldn't have known, and it may have maybe a negative impact on the decision of the insurance company, potentially rating them, meaning the rates are higher, or declining them, for example, just because they did that. Now, the regulation says this cannot be done, all right? And the government says through legislation has introduced a bill that says, you cannot have someone who voluntarily did that test and you request the result of those tests and then find out, okay, and determine that this person's an insured. You cannot do that, right? But this person does not have to tell you anything about this test. It's actually illegal now for you to ask that whether or not you've ordered a kit, from 23andMe or any others that do the similar things, right? So, so are there going to be more regulations as a result of COVID? I'm sure the industry is talking to the government about it, but I think what I'm seeing is that the industry is leading the way in, okay, here's what we believe would be good for consumers, and they've been very good that way. So imminently, I don't see anything new coming in, but you never know. So,
Okay.
yeah.
And in terms of, I'll change a bit your hat. I'll put your maybe a global hat. So obviously we've seen a lot of debt in sovereign countries, and people are wondering if we're going to see inflation. Where do you think the situation in terms of global financial stability, global financial order will go?
Right. So a lot of G7 countries, as you know, they're pumping money into the system, quantitative easing. The Feds are, printing money as we speak into the trillions of dollars, right? So a lot of that is going into either the stock market and really giving that liquidity into the market to ensure that the market continues to function with having enough of that liquidity. Canada and US, right? So is there going to be inflation? I'm sure like the Fed and as well the Bank of Canada is watching that very closely. In terms of where insurance companies will see as a net effect, low interest rate environments, which is usually when you print money, money supply goes up, interest rate goes down, typically isn't favorable for insurance companies because when they collect premium, they rely on part of their income, significant part of their income actually, as investment income, right? So when they collect premium, they invest it into various portfolios and according to their specific investment strategies. So having a low interest rate environment isn't a bad thing, obviously, but for insurance companies, they have to figure out ways to ensure that the return continues to come in so that they could continue to pay those potential obligations, right? Actuaries will figure out what they need to charge. We're seeing, or we have seen already, some carriers already announced that they're increasing the pricing and some have increased already. And so that's a net effect of a low interest rate environment.
Okay. And so in terms of resetting the competitive positioning, where do you see post-crisis the winners, the losers from the pandemics, basically?
Right. I think the industry as a whole collectively becomes a winner, right? So whether if we're talking about like different players in the industry, you've got the carriers, you've got the intermediaries such as an MGA, managing general agency, and then you've got advisory firms and advisors, right? And then on the top, there's also reinsurance companies. I think collectively, everyone gains in terms of becoming more digital. It's really actually pushing forward what we need to do in the industry on an ongoing basis. And so it's important for the industry to be digital. As I don't have to, I'm preaching to the choir here, I think, in the sense that, people, if you think about the customer experience, it used to be that not very good. But now with digital options available, I think customers are the winner, right? Because there's now more options. Underwriting limits have increased. That's also the biggest beneficiary of that is also consumers, right? They're able to purchase, having better purchase experience. The carriers are more innovative. I think they become winners if they're innovative, right? If they don't innovate or don't invest in innovation, then perhaps if you have to pick a loser, then those who don't do anything are the ones that will suffer as a result, just like any industry, right? I think even the intermediaries such as MGAs, even they're looking to improve what they do to advisors, right? So to provide that value proposition, whether it be training programs, technology services, and so on and so forth. Advisors, you've got different camps of advisors, but at the end of the day, advisors know that they have to survive, and the only way to survive is to adapt to the needs of the customer. So at the end of the day, if the customer wants digital and they provide digital, they will continue to win. If the customer wants digital and they don't provide digital, they will continue to struggle. So at the end of the day, those who adopt the technology will be, I think, long-term winners.
Okay. And that's a good segue, actually. So if you look at the incumbents, where do you see their digital transformation moving forward? We were discussing a bit offline the fact that it's not that the banks were so much in advance, but the insurance have been lagging definitely. So what do you think is the next things that on their roadmap?
Yeah, I think reflexive underwriting is a term that's used a lot in our industry. being, okay, if you answer A, then basically the algorithms built within in the software language, built within the underwriting rules that of the insurance company. So, at Finaeo, we help carriers figure that out as well, having that application flow that's reflexive of what the answers are. So, how an application is on paper, for example, sometimes like, okay, you could skip an entire section if you answer no to certain questions, right? You haven't had cancer, so they're not going to ask you more about cancer. You haven't been skydiving, they're not going to get you to answer more questions on skydiving. So it's kind of like that in the manual way, where it becomes, that would improve the industry that way. Having these reflexive questioning, those who will do it well will continue to have a better experience for the customer. Because who wants to answer like the actual entire form, right? When they don't need to. So those are some good wins for the industry for sure. Yeah.
Very interesting. Thank you so much. And last question, which is a bit lighter. So, what did you change yourself in your life in the last few months, and did you pick up good habits?
Yeah, I think so. I try to stick to a schedule, whether it be like 5 p.m. Okay, I do something that's completely not work related. Okay, maybe it's 5 to 6 p.m. Maybe play with my children, spend more time with them, or go out play tennis game with my friends, or whether it be cooking. I've started, actually, let's put it this way. I've tested a lot more recipes than I had before. So we have a cooking channel on our Slack channel at work, and we share the results of our cooking, the fruits of our labor, if you will. So we share the recipes, we share how we did it, and there's joy to it as well. So yeah.
Cooking seems to have been one of the favorite activities among the people I've been discussing with, whether they order more groceries and then prepare, whether recipe already prepared and you just cook yourself, whether they go creative. But it seems to have been a healthy occupation. One of my friends decided to bake bread every day. I'm like,
wow. Okay.
After a month of eating bread every day, I'm not sure
I love bread.
Exactly.
Yeah.
But thank you so much, Donald, for taking the time and sharing your thoughts on the insurance. Well. That's very, very enlightening, and I'm really looking forward to our next conversation.
Sounds good. I look forward to it as well. Thank you, Peggy, for your time, and really appreciate those questions.
Thank you, and all the best for benefiting from what's happening right now with Finaeo.
Thank you. Take care.